Welcome to TMS Insights. It's been very busy here at the back end of February with reporting season, all the reports coming through, and a lot of concern that we have to talk about from the global coronavirus issue, Ben, that's now moved from China to other parts of the world. I guess it's front of mind for everybody. It's affected share prices, obviously, over the week, down about 6.5%. The market, which in some cases is throwing up some terrific opportunities, but we've got to try to express some of the concerns that are loaded up with this. Ben, we don't know where this is going to end. We know at the end of it probably great stimulus from China, and it's obviously brought a number of stocks into focus for us.
Yeah, definitely. It's a frustrating sort of period, I'd have to say, because there's no definitive answers as to, and so one thing you can do is you can look back at how sort of markets typically react during periods like this when it's faced similar uncertainties. And what I think you've generally seen is markets will normally rapidly price in a pretty nasty scenario, and then they'll sort of adjust to what's happening in the world, and there's that period, and then we see them start to recover potentially while the news on whatever's going on continues to get worse. Yeah. So I think we're going through that pricing in the worst case scenario at the moment. Now, are we 70%, 80% of the way there? Who knows? The thing I would say is that as we've gone through the earnings season, a number of companies are talking about impacts to the business, and there are real impacts to quite a lot of different businesses as a result of this. Very few positive, it's pretty much all negative. And companies have definitely become more reluctant to give guidance for the year because, which is a good thing because they don't know what the next 6 months holds. So, I think returns from this point will definitely be good over the next 5 years. Over the next few months, I think it's going to be very bumpy. It's kind of like a day-to-day proposition. It sounds like in China, things are actually improving. But we've now got outbreaks across the rest of the world, and, how quickly can authorities get on top of that's going to be key. And I think we're going to wake up to some headlines that have come out during the night.
Well, I think headlines are a big thing because the media does sell fear to people, and often you don't want to buy into that. You want to speak to your trusted advisor and get advice about the real nature of the hard investments that you're making, which I think we'll get on to now, Ben, because we'll always talk with greater knowledge in hindsight of something like this. In the midst of it, it's always easy to misread or get it wrong in some ways. But we can talk with certainty about earnings reports which have come out, which give a good guide to how the companies have performed in the December period. And Ben, again, overall, we're seeing some good numbers coming through. So, as you said, there's been some comments about the outlook being affected, but this morning, some good results from a company like A2 Milk.
Yep.
Again, a China beneficiary potentially.
Yeah, well, I mean, and it's funny, this company's actually benefited from what it seems, what we've seen is a stockpiling of infant formula occurring in China. This is the management of this business has been superb. They've still managed to get this product through to the customer, which a lot of other companies are really struggling with. And so that's important. The company's actually the US part of the business was really quite interesting. And, this is a company, it's sort of a face you'd think would be hit by what's happening. Yeah. It's actually doing better as a result of it. So that's a good sign of the management.
Brexit, remember Brexit? That's almost been forgotten. Brexit's been going on now. It's affected Link, though.
Yep.
Link we've been interested in for the PEXA business, but the rest of the business has obviously had some impacts there that came up in today's result.
Yeah, there's another one as well, Reliance. I'll put them both, we might talk about at the same time. Link has suffered because of a complete drop-off in activity in financial markets in the UK and Europe. Whilst this whole messy, ongoing situation has occurred, there's been less floats, companies sort of sitting on their hands, waiting to see how it play out. So they're terming it as a year of transition, which I think hopefully is right, in that the future in the next sort of year or two will be a lot healthier. PEXA, the numbers are outstanding. So this is a business we think could really be a special thing to own over time. And that's actually accelerating. And with Reliance, which had a good American result, but not so good in Australia, with a drop-off in renovation and home building activity, and in the UK and Europe, a real drop-off. Again, people sitting on their hands. That downgraded earnings guidance by about 8%. I'll just quickly say, any company that's coming out with even mildly negative news at the moment is just getting hammered, which is sort of hard.
Yeah, definitely, and that probably makes good sense in a lot of ways too. If you are, because there's enough good stories around as well. And we heard from Seek again. We love hearing their report. Andrew Bassett giving actually the same old tune. We're going to keep reinvesting in our business. Obviously affected with Xiaoping now 50% of the revenues of the entire group. But Seek still looking good, Ben?
Absolutely. You know, and these guys, I think, did a very good job at saying, we're just going to continue on our strategy. We're going to invest even more aggressively. And we think we could actually widen our lead over competitors during these sort of periods who are more sort of backing off.
Yeah.
The other thing is sort of saying, look, we don't know what's going to happen with job ads in China, but giving the market a guide as to what the implications are.
Yeah.
Again, it's a short-term thing, and I think hopefully a good buying opportunity maybe, but definitely Seek looks good long-term.
Look, we always laugh when we talk about Invacare, and I mean, but this one, it's remarkably volatile as a stock price. It reported yesterday morning, and really impressed how their investment has delivered results that were very much shown up in this December period.
Yeah, I mean, this company's gone through sort of a bit of tumultuous recent couple of years because they've said we're going to aggressively invest in renovating our centres to try and move them up to where expectations are. And we're now seeing the results of that flow through the P&L. And just a quick statistic is the renovated centres, they saw a 5% increase in case volumes and an 8.5% increase in EBITDA versus their unrenovated centres. And so that is showing that the company is getting a really good return on that investment. And, I think the future
good
looks very
long-term company.
good.
I always liked that one. Wesfarmers, was a really good result. I was on that call again. Bunnings representing more and more of that business, and a ridiculously good business. The focus is on that. Share price ran up but pulled back this week. Terrific company, Ben. Margins there over 55% now. Unbelievable.
It's amazing.
In Bunnings. So terrific one. Moving to Woolworths, which had obviously a little bit of a surprise there on the underpayment issue. Got a bit bigger on them this time around. Yeah. But food price inflation's been helpful.
Yeah, definitely. And also closing in on the demerger of the Endeavour drinks and hotels business. What a great turnaround this management team's executed, and it's continued to flow through. There's a couple of criticisms maybe, but generally the business is headed in the right direction. And, probably the big surprise is these two companies, Coles is separate now, they've completely swamped back over Aldi, which everyone was talking about as the big threat to them. But that's gone the other way in the last couple of years.
Cube was slightly disappointing there, a bit of messy numbers, but again, probably didn't justify the price action it's had over the last year. Yeah,
I think so. And a catalyst here could be this, they're looking for someone to buy into the Moorebank.
Yep.
Huge land holding and infrastructure sort of bottleneck area. If they can get a good price of that could see a re-rating of it. But they are exposed to the logistics industry, and they warned that there's a slowing down in shipping containers, etc., because of Corona, and that has given them a short-term hit.
Ramsay, private hospital operator, global, obviously. We've been feeling they didn't have earnings momentum. That pretty much came out in this result. Yeah,
look, this has been sort of a bit of a puzzling one because it ran up to close to an all-time high, but there's been no sort of change in the message from the company. So they're still guiding for 2 to 4% earnings growth for the year. It's a very stable business. They own great assets, but probably look a bit expensive in the short term versus the earnings outlook. The company used to grow at sort of 12 to 14% earnings growth, and that's really come off in recent years. So maybe a bit stretched in the short term.
Yeah.
Long term is still great business.
IMF reported, and they've had the big year, really, haven't they? I've liked this one for a long time. Again, a funding litigator that has exceptionally good returns on the invested capital they make and a really high win rate. not everybody's cup of tea always. Some people don't like the kind of business they're in. I understand that, but Ben, really interesting, and it's got a good future in front of it.
I think so. This company is morphing into a funds management business. It's certainly had a couple of big wins recently with Wivenhoe, and one announced today, the defence case. So it's turning into a capital-light business that's going to, I think, spin off quite a bit of income in coming years. So that's, it's got some growth and income. Looks quite good for maybe a lot of clients.
A new stock, just to leave people with when we wind this video up, Tyro Payments listed last year, a neobank ostensibly, but people will know the PayWave devices they would have used at various merchants, including restaurants and healthcare outlets, for example, but a competitor for the major banks in that space and growing very rapidly, backed by Mike Cannon-Brookes of Atlassian and some very wise and heavy-hitting sort of shareholders. Ben, Tyro floated really well. It's pulled back with this market pullback.
Yeah.
Certainly one to look at now.
Yeah, I think so. I was on the call for this one, and it's a different business to what I expected. I thought it was more just the technology and device business, but it's almost like a neobank.
It's a neobank.
And it provides cash accounts to all its merchants. It's starting to lend to those merchants. Can see data in real time, and with the technology it's got, it's providing solutions that the banks typically take long times to do and are frustrating to deal with, and all those sort of things. It looks really interesting, and it's got great people behind it, with Mike Cannon-Brookes as
Robbie Cook, the CEO, and
Yeah.
it's the Trojan horse are really those devices.
Yeah.
The big game is getting those accounts from the small and medium businesses, which they're going to start to grow very rapidly.
Yeah.
So.
Yep.
All right, well, we won't wind up the video there. Just to bear in mind, obviously, again, the market has had a weak February, but it more or less just writes off the very strong January we've had, and there are many good stories in the market. Please give us a call. If you've got any concerns or want to talk about the market, that's what we're here for. We look forward to bringing you an update again in March.